Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, May 7, 2015. Inside the numbers tonight, we're going to talk about the SPY and the E-mini futures contract. We'll give you some numbers and some projections on what the next few days should bring. And we'll talk about crude oil, we'll talk about gold and the GDX. And we had an end-of-the-day rally in GDX, which we'll discuss, and we'll talk about interest rates in the bond market and the U.S. dollar. All right, let's get right over to the chart. So here's a busy daily chart of the SPY. And let's go over the busyness, okay? So we have our support levels here, okay, the purple lines. And yesterday we got down through the 207.50 area, did not quite get to the 206, and bounced. And just want to make mention of something, how to interpret that, or at least how I interpret that. So when I have support levels on the downside, and the support levels don't get hit, and they don't get hit by a margin similar to this one from yesterday, okay? So I'm not talking about a penny or two, and I'm not talking about $1.50 either. You know, so yesterday, the low here was 206.76, and my downside support level was 206. So what I'm saying is that to me, that is bullish behavior, okay? Let me just fix that. Okay, so that's bullish behavior, and the way I interpret that is that we should see some more upside. So now let's roll into some of these lines here and what they mean as well. So we had the head and shoulders pattern developing the other day, and yesterday we broke through it, but yet we closed above it. And the title of the video yesterday was the failure of the head and shoulders pattern. And lo and behold, today we had follow through on the upside. Therefore, this pattern really did fail. And so that's item number one. So it's just something of note, and it's something to watch. It was interesting, and it's not an accident that at the end of the day, on Wednesday we rallied up to close above this line to negate the head and shoulders pattern. Had we triggered that head and shoulders pattern, the likely downside target would have been, and that's the difference between a support level and a target. If the head and shoulders pattern triggered, we would have been looking for a 204 target, not support. I mean, it would have been also support, but where I'm looking for 206 right now to be support, meaning to buy 206, had I been short and it was a target, that's where I would have taken the shorts off. So there's a difference between a target and a support level, okay? So now we have the downsloping trend line here, this dark purple line, and the dark purple line is where we butted up against today. Now we pierced through it a little bit, and then we finished right below that line. Now you can see where these lines are not accidental, right? I'm not really drawing lines. The market is drawing the lines. I'm just tracing it out from pivot high to pivot high, okay, through here. And what we saw was as soon as we broke above this trend line, the market started to rally. We came back to test it, broke below it, fought back ahead or above it. Okay, now we're coming back down. Now we're trying to fight back ahead above it again. So you can see where it's of importance. So now where do we go from here? So what I think is going to unfold over the next few days, here's the scenario as I see it unfolding. Now, of course, everything can go out the window tomorrow. You have the phony jobs report coming out early in the morning at 8:30, and that's going to whip the market around, and that's really going to set the trend and direction for the day most likely, okay? However, here's what I see happening, barring some crazy whipsaw action with the jobs number and something other than what I'm thinking. But here's what I'm thinking, and if we do see this, then the rest of it will play out. So if we see this tomorrow, then you can pretty much say the probabilities get higher that next week's forecast will play out. So here's what I think. If the market goes up tomorrow, which I think it will, okay? I'm not saying it will. I think we're going to rally into the end of the week because I have Monday as a turn day. And, of course, we can sell off tomorrow and the market could go up on Monday. That's certainly possible. But just know that Monday's a turn day. So what I'm saying is if we get a rally tomorrow, I don't think that we get any substantial rally. Like, I don't think it's a 1.5% type of rally. But if the market is higher tomorrow by, let's say, maybe a dozen or so S&P E-mini handles, or $1.20, maybe even $1.50 on the SPY. Okay, if that's the case, and we finish up there on tomorrow afternoon, then I would look for downside beginning Monday into maybe even mid next week. So that's the scenario as I see it playing out. Of course, if the market's down tomorrow, everything changes. Okay, so that's my best effort on the S&P and the E-mini. I didn't show you the E-mini contract tonight, but there's nothing new. I mean, the numbers don't change. We can flip over there for a second, and the numbers don't change. We're basically looking for once. By the way, so let me go back to the SPY just because we've been talking about it. It's just easier that way. So once. Let's say that does play out. Okay, let's say the market goes up tomorrow and then down for 2 or 3 or maybe even 4 days next week. Where would it go? I don't think we'll come back down anywhere really below where we've been this week. So I would consider that a retest. And if we did the retest into mid next week, okay, and we found some support there, I think that may be a catalyst for the next rally. So that's kind of where my mind is. It'll probably change, but we'll keep talking about it every night, and we'll watch it as it unfolds, and I'll give you the best guidance that I know how. Okay, so let's go over to the gold market, all right? So today gold was down again, and again, this pattern is not necessarily something that I can derive a direction from. I said my line in the sand was 1184, and we pierced through 1184 last night, and I'm just not interested in playing the game. I've got to see something more definitive until I'm going to risk my capital, which is the inventory in this market, right? There's better opportunities. Can gold go up tomorrow? Yeah, absolutely it can, but I don't have any chart pattern telling me that I should risk my capital. And why I say can gold go up tomorrow? Well, let's talk about that for a second. Let me bring up GDX. I thought was interesting today was, here's the, he bounced off support level in GDX today, and one of the members picked that up, sent me a message earlier today, and that was a good find. I wasn't watching it at the time, but he had a good find, and that worked out, so hopefully made some dough on that trade. But anyway, what you have here is you have this is the daily chart. You have the downsloping trend line that we broke through. So that's a bearish signal there. You came right into the support level. And then here's what I wanted to show you more importantly. Let's look at what happened at the end of the day. Okay. At the end of the day, now here's the bounce off the support level down here. All right. And you had a nice rally off that support level. Then you consolidated for a few hours, and then you made another move higher. Now, the reason I thought that was interesting was because gold did not have the same move by any stretch today, yet gold miners did. And sometimes that can be a tell of what's foreshadowed into tomorrow. And, it's kind of, we had one of those last week, I think, or I can't even remember what it was, but it was something where I said I've read this book before. It may have just been in the market itself. I don't remember. It was a few days ago. But it's the same routine here. I've read this book before, and I wouldn't be surprised to see gold pop tomorrow, led by gold miners. Don't understand why that would happen or what would cause that to happen. It doesn't really make a difference. But I know the money was flowing in here this afternoon. And if the money was flowing in here this afternoon, you really need to have gold stay up in order to sustain any rally in GDX and the gold miners, right? Because they're so dependent on the price of the actual metal itself that I would think that anybody going long GDX feels that gold is going to pop. And so that's kind of where the thing comes from. It's definitely not scientific. It's just one of those things after over 20 years you've been watching this kind of stuff happen over and over again, and you see it and you say, well, here it is again. I've read this book before. Let's go over to oil. Oil was interesting today. So oil had a great rollover from that top yesterday, right? So here's what we have. Let's recap it, all right? Here's our daily chart, all right? So we were looking for the move from over here. We were looking for the move up. We got that. We made the money there. I said we could go as high as 64, but then yesterday we put in a topping tail. But we finished above 60.50, which was this support level here, which was our original target. Remember, initial targets, which would be resistance, once the market goes over that point, okay, then becomes support on the way back down. That's just common. Okay, that's just the way that's the way it works. So, but we stayed above that yesterday, and then we got confirmation that the topping signal was on. In other words, it was game on today, and we came right into the daily chart bottom from the other day on Tuesday. So that was a top, interim top. Now we're still above 58, which is still bullish, right? We're still above this major trend line here, which was the pivot, this pivot high, and then we consolidated here. So it's not out of the realm of possibility. In fact, it's more likely that the market's going to want to come back and test the area from which it broke out. And if it can hold, okay, and we can continue to close above this level here, okay, which is really at the, 57 and change area. If we can close above this level, okay, then we can take another run, and 64 is still in the cards. It's not off the table yet. We're just going to go down for a few days and maybe test this. So that's the way I see oil unfolding. So what I'm looking for, the next trade I'm looking for, is if we come in and test this line here, this pivot high, and if this pivot high holds, I'm going to be looking for another rally one more time. And what does that look like, right? How many times have you heard me say this? Watch this, okay? Let me just move this chart over. Watch this, okay? We have an A, B, C. Okay, we'll see if it plays out like that. So this could be the A move, this is the B, and this is the C. And that's part and parcel to corrective patterns. So we'll see. We'll see how it plays out. I'm looking for this area to hold, looking for a long from this point. Could you be short into this area? Nah, I wouldn't be, but I guess you could. But the majority of the downside's been taken. So I'm not going to buy a market after it's been down from, almost 63 or 62 and a half, or what was that number yesterday? 62 and a half, down to 58 today. I'm not going to, or 59. I'm not going to sell short at that point, but I am looking for this, and I'm not saying it's a target. I'm saying if it comes into this area and holds, that would be a trade. Okay, so let's go over to the bond market. Now, the bond market rallied today, but we're still not out of the woods, because now, until we can get over this 123 area, okay, and close above there on a daily basis, the bond market is still weak. This is nothing other than an oversold bounce at this point, up until we can close above 123. If we can close above 123, we'll talk. Up until that point, I'm looking for some more downside. And I got to tell you, if we get the more downside, we may go as low as the 116. And also this double bottom at 118.5 would be a lot of support as well. So if we did go lower, we would want to start accumulating here, because this would definitely be a buy area. Why? Let's flip over to the 10-year yield. And what I can tell you is that the next area of resistance would be this double top. And this double top, or even short of this double top right here, that would, any of these, like here, 2.3 would be a huge level of resistance. And then the next area would be 233, and then all the way up here. And I don't know if we get that high, but certainly the next area to test is going to be this pivot high here if we can get through this one, and it looks like we will, okay? So if we can consolidate here for a couple of days, then we might take a run at 2.3 up here at this pivot high. And if that happens, that's probably going to coincide with about this 118.5 here on the TLT. And if we get that 118.5 on the TLT, I'm going to probably start buying it. Even if we go down a little bit further to 116, I'll leave some room in the purchase, leave some purchasing power. But that would be a good trade. So that's what I'm looking for. I'm going to see a pattern develop here and see where it goes. If we get above this line, we'll see what happens. If we stay below 123 and we come lower, then there's a trade developing. Okay. Last thing we'll discuss tonight is the dollar. We had the bounce in the dollar today right off this bottom trend line here. I mean, it was picture perfect, wasn't it? This was the buy with three hands, right? So, is this going to hold? Here's the problem, okay? If we go sideways for a few days, then this will be susceptible to break. And at this point right now, I don't necessarily love the pattern. This should have had a stronger bounce here off of this. We should have catapulted back above this trend line here. And it didn't happen. We should have went from this low here, we should have went back into the 50-period moving average, or the 20-period moving average, which is the red line. And it didn't happen. So the fact that it didn't happen leads me to believe that there could be some more downsides. So be careful with the dollar trade. Could you see some more upside from here? Absolutely. But really right now, until we get above the top end of this channel here, I'm going to think that it's still susceptible for lower prices. Again, that's okay. This is one of those trades. You have to think of it as something in between a trade and a long-term investment. And how you view a long-term investment is up to you. I view a long-term investment usually a couple of months, but this one's even beyond that. In terms of this investment, I'm looking at this one in terms of potentially into 2016 or maybe even just to the end of 2015, where we just start to go back up to par, which is 100 and beyond. And I know that we're going to get to 105 to 110, somewhere in that neighborhood. And I'll be able to pinpoint the number and where that top is going to be as we begin that move and we get into that move. When I see the velocity on the way up, then I'll be able to calculate where that move is most likely to top out. So that's the story in the dollar. Just be careful with the dollar. That's kind of the whole picture as I see it. So hopefully this is helpful, folks. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.